We'll dive into a quick introduction for everyone. We have an awesome workshop planned today around fundraising and cap table. So if this is your first event here on Entre, welcome. We do a bunch of workshops. We do a bunch of virtual events and also in-person events. Charlie and Fidelity are one of our partners. They have a fantastic community for founders. They also have a fantastic cap table software, which we'll get into here in a little bit to help founders fundraise. We're going to give Charlie a chance to do a quick intro on Fidelity. We will do a founder interview with Chisa from Pedal and how he just fundraised and his experience with that. And then we'll go through Shoebox, which is the cap table software. And then we'll also do a Q&A at the end with Gia from Oak Seed Ventures, who is a VC, and we'll do a quick Q&A there as well. And if you guys have questions throughout this whole workshop, please use the room chat. We're going to get through a ton of stuff. So make sure you guys are utilizing the room chat to ask questions. Feel free to also share who you are, what you're working on, your startup, all of those things as well. And we'll get a lot of great questions, hopefully, for everyone. But we have a ton of stuff planned. So without further ado, Charlie, I'll kick it over to you. Feel free to introduce yourself, and then we can get the ball rolling with Chisa as well.
Yeah, thanks, Mike. Charlie Stevens here with Fidelity. We are launching Fidelity for Startups, which is a community of VCs and founders, bringing those two ecosystems together so that there's access to capital as you fundraise. So I'm here to be a supporter of you, hence why we're doing this. Bring in Chisa, if you want to jump on too, we can get you going. I know you got a limited amount of time, but generally what we want to do here was just obviously talk to Chisa. He's gone through the fundraise process. I don't know, Chisa, if you've announced if you're done with the fundraise process and everything like that, but hopefully we can kind of give some insights to everybody on here who's potentially about to go through that or eventually will get to that point of fundraising and just how you've navigated it. But for context, do you want to just give a little bit of background on yourself and what you're building and where you're at right now?
Sure thing. So what's up, everybody? My name is Chisa. I'm the founder of a company called Pedal. Pedal infuses corporate America with culture. So we are a Gen Z hiring platform. Corporate America comes to us to connect with what they call the next generation, what we call the current generation that is looking for employment. So the way that it works is companies from all over different industries, whether it's Prudential, Financial, or Paramount Pictures, they send us different job descriptions, and we actually pair those job descriptions with different influencers in our network that then make content about the very roles that we send them. They make that content, it goes on to platforms like TikTok, Instagram, YouTube, etc. And then their viewers become candidates and actually apply for the very roles that they just created content for. And you can probably imagine they apply to that they apply to that role through our platform. And so our platform will stack rank the applicants and send over the top applicants to our different corporate partners, and they go and hire right from there. So kind of in a nutshell, what we've learned and we're continuing to learn is how to conflate influencer marketing on top of the employment world. And so our theory is that if we build a platform that meets the stakeholders where they are to an extreme extent on both ends, that we're going to create the most efficient, fastest, and cost-efficient bridge between corporate America and anyone that they want to recruit. So we've had some success in this process. We're a Forbes 30 under 30 company backed by Google. They came into our pre-seed. Techstars company. We were recently at the White House dealing with just the federal government's issues when it comes to recruiting young talent. As you can probably imagine, there are a lot of jobs within the federal government that people don't really know about. And the jobs that were with the federal government 10 years ago are not the same ones that they're hiring for now. And being able to communicate that to Gen Z is not always the easiest thing. So they work with us and they utilize us a lot to find success there. And so for us on our part, we raised our pre-seed, raised about 700K. Haven't announced the close in our seed yet, but you'll be seeing that, strategically in the next upcoming months for sure. And yeah, that's how we're rolling with it right now. We're an official partner of the New Jersey Devils. Sorry, forgot. Got to add that in there. We have a game later today, so that's why I'm wearing this. I don't always wear Devils gear. But if you watch the New Jersey Devils on ESPN at any time this year, if it's an away game, you'll see our logo on their helmets. So definitely keep an eye out for it. If you're like randomly at a networking event and it happens to be on the back of a bar screen, like that's us. So definitely stay tuned. So that's us. That's Pedal in a nutshell.
Chisa, you went through two different stages of raising capital, the pre-seed and then also the seed, which you'll be announcing. But you've done like an extremely good job of aligning yourself with strategics and going through that process with just friends and family, investors, angels. Like how do you bucket those for people who are raising at different stages?
Yeah, sure. The way I bucket it is friends, family, and fools, right? That's like the very first bucket you'll ever be able to really dive into. These are the people that know you and know that, hey, I might not have seen what you've done in the startup world yet, but I definitely saw what you've done like at work, right? Or I've seen what you've done with this project in a past life that we were both in together, right? So they have a bit more reason to believe in you up close. And then the next one, I call it like influencers and influentials, right? We like in our team, we call it I. And these are the people that, how do you say? They're the people that like, if let's say Charlie's our I, right? If Charlie puts money in, that's a green signal that like we can probably not get Michael to put money in, right? Like maybe now Bryce is gonna put money in because Charlie put some money in. So it's like, these are the people that we know that if we target them and we're able to bring them onto our team, well, then now they're going to be able to influence other individuals to put cash in. I hope that makes sense, and definitely let me know if it doesn't. And then the next stage from that is institutional, right? Institutional capital. And that's when you're dealing with traditional VCs. So I&Is typically are going to, it's certain angels that are going to be like have the relationships and their network to connect you to. Then from there, you have like traditional VCs. And that's where you're dealing with different dynamic, right? Because it's not an individual making a decision most of the time, but it's like a team. And a lot of times you have your champion in there, but you have to make sure your champion can pitch you across the board to everybody. So that's how I've really bucketed it, right? Family and friends and fools, influentials, and then institutional.
Yeah, I think the influential instead of me would probably be like the Gary Vee, who you were on his show and you got some investment from him. But
yeah, I think Charlie Stevens is pretty good too, me personally.
Well, I think there is a bucket where I fall in potentially, and this is like a shameless shout out here to myself. But like people who are also seeing deal flow and passing along to investors, right? I don't know what you would call that, but I think that's where I sit, and there's lots of other people in that world. And just like, as Fidelity continues to build out this cap table product, I mean, that's where we're supporting a little bit more by trying to help share the deal flow. I took Chisa's deck, passed it along, got some warm intros, and hopefully that was helpful. When you're keeping in contact with these strategics, I mean, part of the job of the CEO is to keep the company funded, well-funded. Like, that's one of the biggest ones, right? How are you staying in front of these people with updates to keep them warm enough so that when the time was right for this ask of the seat, that you were able to execute? And then how did you also look at that time frame of, I've heard 30 days, next 30 days follow up with the next meeting, in the next 90, like you're closing and you're showing that traction. Like how are you looking at that cadence of that fundraise?
Yeah, so when you're a company that is in, like, let's say pre-seed, or you're in startup mode, your resources are always finite, right? You're always figuring out what to prioritize at all times. And, we joke on our side that when we're getting ready to either launch a fundraise or like make a major move, or we know we're putting ourselves in a position where we are going to have to make requests from other people. It's almost like when an actor is getting ready to like debut a movie, right? Like they are on the Tonight Show, they are on Jimmy Kimmel, they are like on this interview, on this platform hitting. And like we kind of see it in the same way. So it's like we on our side use social media really aggressively to make sure that we are on top of people's minds, and not just on top of minds at a quantity standpoint, but on top of minds in a quality standpoint, right? I might not post every single day, but when I post, I know it's going to be a slammer that's going to make people remember me for like that next 2 weeks, 3 weeks, 4 weeks anyways, right? So that I don't have to post in quantity. And we really looked at it from that approach. And then on top of that, of course, sending out these monthly and quarterly emails. Honestly, I feel like I could be even better at it on my side, where I am doing it like weekly, but we do try to really emphasize a quality and not quantity approach, right? So that's how we really hit it. Like on my side, and on top of that capital piece, I feel like it's also my job to make sure I'm strategically creating relationships that are going to put us in the news, right? Like put us in a position. And a lot of times that is politicking here or politicking there, right? And it's getting a lot of inspiration and meeting with people, right? When I was in Austin, I met with Michael in person for the first time, and we sat down, and things he's saying, it's making me think. I'm like, oh, you know what? That's really interesting. And I'm taking that and I'm literally implementing it immediately, or putting it into our plan so that we can be constantly top of mind. And then when it gets to this position, when we're dealing with the quote unquote ask, you know, I would argue that this is probably like the boisterous founder in me. Like, I feel like I never ask for money, right? I'm shameless in my reach out. Don't get me wrong. I'm shameless in my reach out. Let me make sure you know, but I don't feel like we were asked for money, but I feel like we've really presented the opportunity a lot of times to a lot of different people. And, you know, I think that whenever we say from a position of like asking, it can sometimes feel or come off like you're in a subjugated position. But it's so important to remember that as a startup, you are literally the prize, right? Like you're the prize. And like people get to park their money with you, and like you work tirelessly day in and day out to like multiply the value of that cash. And they have multiple diversified investments and portfolios, and you are focusing on one thing. So it's like important to recognize the value chain and like value system of that. Like you are the prize and you're presenting a really great opportunity. And maybe if you don't feel like it's really that great of an opportunity, then it's like, yeah, I'm asking like where we need this. But honestly, if you handle your business in your day-to-day, you shouldn't be in that position too often. And then you are in a situation where you're asking. But ideally, if you are ramping up towards a fundraise, you are getting yourself in a position to present a really great opportunity, because you've been able to figure out how to position this into a great deal. And if you're able to position it in a great deal, you will convince yourself that it's a great deal, right? To where you are now feeling more confident in that showing off period. So that's how I feel.
Yeah. We got Chisa just for a little bit more. So if anybody has questions, put them in the queue, and Mike will ask one or two at the end. Chisa, just with like going back to strategics, even like New Jersey Devils, like there's all these different avenues. You talked about the Googles, the Paramounts, like the bigger names, the Amazons you're working with. That seems like a different muscle you have to flex, I guess, with the corporate strategics and stuff like that. Like, and not to mention that's going to help you get more capital from the VCs, because you're showing that you're getting the data points from these types of people. How did you structure maybe the pilots with them that, well, now you're using their brand name, but you're also learning from it and iterating, because you did go through iteration period and everything. So,
absolutely.
Yeah. How did you take that on?
Yeah. And you know, something that we're testing out right now that I just want to push out to people, because we're seeing traction on it. I don't know if it works yet. Right? Maybe you'll figure it out before I do. But something we were even saying was that, hey, we've been working with you for a few months now. Instead of payment in this next period, could we really look at this as an investment? And like, can you put us in partnership with that department? So, hey, it was going to be a $10,000 contract. Like, let's see if that can just be an investment. That way, right, when you're dealing with those influentials, hey, this Fortune 500 company is now an investor on our cap table. And so it's like a really different system and different way of looking at it. And that's where those different muscles kind of start aligning. right? Now, to answer the question further, right, how do you position these pilots to bring these large brands on board? At the end of the day, you have to be able to sell your company, right? Like the same way, it is the same way that we sell to investors about shares of our company is the same way. It's the same muscle that you're selling to clients, but obviously you're dealing with different vernacular and different verbiage, right? So at the end of the day, people are going to buy things that they believe are going to bring them value. I will tell you that the way not to do it is not to actually offer your product for free to these companies. That's absolutely what I thought I was going to have to do. And I went in there. I was doing a deal with Live Nation, Ticketmaster, and I was like, "Yeah, you guys can use it for free. Don't worry. Like, it's okay." And she was like, "Why are you giving it to me for free? Like, what? Why? What's going on? What's wrong with it?" And I was like, "Oh no, I mean, like, you can pay if you want, but like, I'm just saying, like, we just want to." It's like, "Oh, so you don't really have a lot of other case studies?" Or I was like, you know. So it's like figuring out what that, and this is about knowing your customer, right? Like some people might call it KYC, but figuring out what that price point is so that you can get in, and it doesn't take this person having to get an overall approval from like a boss or a supervisor or whatever. Like, what is that price point that fits in their budget to where they feel like they're getting a good deal, but they can also make a decision really quickly, 1 or 2 calls. And so that you can now get the logos and the brand names so that you can now take those logos, right? And just like fundraising, you're going from like these friends and family companies that are close to you that you're trying things out. Now you're dealing with these influential companies that these logos of an Amazon, of a Remax, of a Synchrony Bank, or of a Paramount Pictures, these logos are now going to influence other companies to work with you too. Because they're going to say, hey, you know what? We don't have the budget of those companies, but if someone is working with them, we would be grateful if they worked with us too, right? And so you then take that and you have more data and proof points to better your product, honestly, for those larger logos so you can maintain those contracts. So that's really how we were able to do it. And Charlie, you're right. In that process, we're iterating. We are like studying the data so aggressively about what, you know, some people joke that our superpower on our team is that we're incredibly unafraid of change. Like our North Star, our goal is like product market fit. Our North Star, our goal is selling the company or having a really large exit. And we will format the company in whatever respects that it looks like to gain that, right? So we're constantly looking at the data we return and we double down on what works and we stop doing what doesn't. And so that's taken our product and our model on a journey to better serve our clients, to help them be able to do what they do now faster, more cost efficiently, but also expand into places that they want to get into. And so learning those clientele, learning about what everyone in the market is looking for and seeing what you can do best and perfecting that and like doing it at a high quality. That's how we were able to really bring in those logos. And honestly, a lot of politicking at the same time, right? It's like, you know, this person's going to be at this event. Charlie throws great events. Michael throws great events. And they bring in a lot of cool people. And so knowing that there's going to be people there, like you have to go and you got to politic. Make sure you're in front of the right people, shaking hands and kissing babies and doing whatever it takes to get that first pilot and that first contract. And that helps you do a lot more. You really can't be a great entrepreneur if you are not shameless. Like you cannot let your ego block your bag.
Chisa, appreciate your time. We got some other speakers here. If there was some questions, maybe you could just hop in the DMs and answer them on the side. If not, you got to jump. That's all good, and we'll follow up. Maybe make some connections. But appreciate you. Looking forward to hear about the fundraise. And Chisa's on Fidelity's cap table platform too. So that's a good segue into here. We'll say Bryce. We're going to bring Bryce in here to talk about cap table. Thanks, Chisa.
Real quick, Chisa, if you want to drop your website or whatever in the chat too for people, or where people can follow along, you know, on social with you, the company and everything, feel free to drop, LinkedIn, website, whatever you want in there for people to follow up. And yeah, I appreciate you coming by, man. We'll have to catch up and chat more about how we can collaborate going forward. And yeah, the Devils partnership is sick, man. Congrats on that too. That's all.
Appreciate that, Heavy. So I'll go in the chat. I'll drop everything. My email's chisa@pedal.com. Pedal is PEDUL, edu like education. And you can check us out at pedal.com, and you can find me everywhere at Chisa. If you know another one, introduce me to them. But you can find me everywhere at Chisa Maine. Looking forward to connecting with all of you. And thanks so much for having me, guys. Seriously.
Yeah, appreciate it. Thanks so much, man.
We all. Bye.
See you. Bryce, we're going to hand it off to you. I know you're having issues with the camera, but maybe you could do a screen share while you talk through. Pretty sure you could do that. But Bryce is here. He's with the Fidelity cap table team and super knowledgeable and just understanding the fundraising process, executing documents. But Bryce, are you there?
I don't hear him or see him. If you're having trouble, Bryce, it's probably because your permissions aren't enabled. You'll have to come up here. Just make sure you're allowing our website for camera and mic. If you're not getting access, just go to manage here and then refresh and rejoin the room. That's going to be the easiest. In the meantime, what we can do is I'm happy to a couple of things real quick. If you guys can please make sure you're opening up the room chat there and sharing who you are, what you're doing, and any questions that you have for our speakers. In the meantime, too, what we can do, G, if you're on, happy to introduce you and Oakseed Ventures before we do the Q&A with you later, if you want to do that. How are you?
Hey, good afternoon, Michael and Charlie. How are you guys doing?
Doing great. Thanks so much for popping on. While we wait for Bryce, I think it'd be great if you can give people a little intro on yourself, and then later we'll get into the Q&A and everything.
Sure. Good afternoon, everyone. So good to chat here with all of you guys. And I have had a career in finance, from angel investing to private equity, public equity investing, M&A, IPO, you name it. So hopefully I can share some of the things that I know and help you with the questions in your fundraising. I also work with startups very closely as a mentor to startups, founders. I love your energy. I love that you have the dream to change the world. So I'll do what I can to help with your dream. Oh, I also wanted to let you know a little bit about Oakseed. Yes. Oakseed, we are a venture fund. We focus on cybersecurity investing / related AI. We focus on seed round to Series A, so some of the earlier rounds. Occasionally, we would go into pre-seed. So we deal with companies that are relatively early in their stage of development, working with them, helping them grow, back them, give them advice. So that's what we do.
Fantastic. We'll get into a little bit more here in a second, but I see Bryce popped back in.
Okay.
Bryce, if you're able to unmute or turn your camera on, that'd be great. If you're still having problems, we will have to figure out something else. Charlie, I don't know if you have the ability to go through Shoebox for everyone.
Why don't you just keep going with the VC side, and we'll have Bryce figure it out later. But
okay,
I think just not to disrupt and just keep going. You're going. I think that's probably best.
Perfect. Okay, I'm texting him right now just to see if there's any way that we can help him out. But yeah, let's get into some of
Can
these.
you hear me now?
Oh, there we go, Bryce.
There we go. Sorry about that, everybody.
It's all good. It's all good. I'm glad it worked out. If your camera's not working, that's okay. No worries there. Are you able to screen share? Do you see the start share button?
Yeah, I believe we should be good there. So let's check that out.
Okay, perfect. Yes, this is great. All right, fantastic. Let's kick this off then and go through a little bit of the cap table software here for
Awesome. Yeah. So sorry about the delay here. Glad to be here and chat with you, rather than dig too heavy into details here, which we're more than happy to do. What we wanted to do was take the opportunity to give you a little bit of an overview of what we do and how we can help, and then take the opportunity to dig into some of our functionality around specifically modeling a pro forma cap table or dilution around a fundraise. So that way we can give the opportunity to hopefully share a little bit of knowledge for you all. As Michael said, feel free to jump in with questions in the chat. In this, we'll walk through some high-level scenarios and just help understand a couple of things. But if there's anything particular to your cap table, also happy to take it offline and talk about that directly. But at the high level, you can see here, Shoebox, our company, was acquired by Fidelity in January of this last year. So almost a year to date on that acquisition, and really a big move for Fidelity, a brand that I'm sure you all know and are familiar with, to really double down on their efforts in the tech and venture-backed space. And so the way that we help startups now under the umbrella of Fidelity is, one, as we've already talked about, through our team and folks like Charlie supporting our clients, helping them with fundraising and growth and perspective. Two, our platform. So the platform really focuses on all the cap table basics and helping you issue equity, manage stock certificates, provide investor updates and everything that you would expect, but also automatically organizing all of your documentation to make the diligence process easier. So that way, as you go through the process that Chisa just went through, you have one less thing to worry about. And so we're here from the earliest stages of incorporation and inception all the way through exit, and then post-IPO, working with some incredible companies like Toast, who joined us at as little as 10 employees, now continues to use the platform as a historical record and uses Fidelity's public markets offering to manage their equity now as a multi-billion-dollar publicly traded company. So that's a little bit of background on that. Again, we're happy to spend time with any of y'all, share more details, and we'll share more in follow-up. But really, to make the most of our time here and give you some tangible takeaways, we're going to walk through, someone noted, this great company, Hooli, a little bit simpler of a cap table than they probably have in the show life, but simple ownership. Gavin Belson, our founder, has about 85%. There's an option pool of about 15% ownership, and then we'll see a convertible note and then also a safe here for a total of about $1 million. And so we'll use this company as an opportunity to walk through some of the mechanics that you all will see as you raise money. And there are a lot of things that can make what I would describe as fundraising math complicated. Right. You hear a lot of talk, especially now, around things like pre and post money valuations or pre and post money safes, or what's the advantage of the safe versus the convertible note. And ultimately, my perspective on these things is a lot of it comes down to math. As you're thinking about fundraising, and Kisa talked about this earlier, it is ultimately sales. The consideration is you're selling part of your company to investors for ultimately money, right? When they put in $2 million at a $10 million valuation, they're buying 20% of the company for that $2 million. And you need to be okay with the capital that's coming into the business and what you can do with that capital, as well as what dilution that affects in you. And so we want to really try to give you the opportunity to understand those mechanics. And so with that, we'll go ahead and we'll create our seed round here. Let's say the company is going to raise maybe $2.5 million at a pre-money valuation of $12,500,000, which is going to put the post-money valuation, or the valuation of the company after that invested capital, at $15 million. We'll keep the liquidation stack simple. So non-participating preferred, liquidation multiple of 1, as the markets have tightened in a lot of ways, that's gotten a little bit more convoluted, but hopefully no one's staring down at down rounds or heavy liquidation preferences that play out more so within the context of an exit or liquidity. And so ultimately we see here, right, we've set up our series seed 2.5 at a 12.5. We're going to see our first bit of dilution happening. So Gavin here is going to see his pre-money ownership, which was 84%, dropping to 70%. And then we have to start thinking about all the other considerations that are going to layer into this. So one thing that might factor into that negotiation of your term sheet is what the employment pool or the stock incentive pool looks like and how much equity is there to be issued out to employees. Typically, investors are going to want to see any increases in that pool happen before their capital is paid in, so that way they're less affected by that dilution, and therefore you are more affected by that dilution. So right now we're going to beef that up to 20%. Ultimately, that's again going to affect our post-money ownership in this case. And then the other thing that we have here, right, we have our bridge note and our safe. So our bridge notes are going to look a little bit more like debt, but ultimately converting into equity. Similarly, they'll have a valuation cap and or a discount. They'll also have an interest rate. So that interest rate is going to accrue over time. And so how that dollar amount converts is going to include that calculation as well. And then our safe, again, simple agreement for future equity, by definition, a little bit more simple. So there's going to be no interest payments. There's going to be no additional capital that are factored into that conversion. And we're going to go ahead and we're going to convert those two different vehicles. And so we see here, we had a note for 500,000 that's converting to 60,000 shares plus the interest amount included in that. And then we also have our 500,000 here on the safe, which is converting into roughly the same amount of shares, but a little bit less. Some of that because of the interest calculation, some of that because one of these is on a discount versus one of these is on a valuation cap. Happy to dive in more to the specifics of how those two vehicles work. But ultimately, we then see further dilution within our ownership stake here. So I'll pause for a second. Hopefully everyone's following along okay. Are there any high-level questions that folks have around convertible notes, safes, valuation caps, pre-money, post-money valuations that would be helpful to just kind of address here before we dive in a little bit deeper?
Hey, Bryce, or Charlie, did you want to say anything?
No, I was just going to say, generally, it should be noted that, we have a free version for pre-seed companies under $1 million raised. So if anybody wants to just hop on the website and sign up, you could play around with these conversions. But go ahead, Mike.
Yeah, no, this is really helpful. I think this is very interesting stuff. And it looks like you guys have done I actually didn't even realize it was this in depth, which is really cool. Because I haven't seen anything quite as detailed as this before. We have a question here about how to look for multiple founders. I'm assuming you can just add founders or other equity owners into the
Yeah. So in terms of the tool, the baseline that we're looking at here is what the existing cap table looks like. So Alex, to your question, if you have a couple of founders within there, we're going to be pulling in that data directly from the existing cap table. So rather than Gavin, you'll see, Gavin, Michael, and Jane, right? And everyone's going to have some portion probably of that about 84% ownership pre. Typically, the big thing, I think, to your question here is the conversion and the dilution that's going to happen throughout the round is going to be evenly displaced across to anyone who already holds shares. So like Gavin isn't going to get diluted less than Michael does. Everyone's gonna feel that. in equal proportions. And there are some terms as you start to get into the nitty gritty of a term sheet that might influence whether more dilution skews towards that existing base or some of that dilution gets impacted to the new investors. But on a whole, everyone's going to be affected evenly based on which side of that coin they're on.
Got it. Okay, fantastic. Yes, this is going to be recorded as well, by the way. We'll have the recording up here to share with everyone soon. Is the best place for people to sign up just on shoebox.com? Do you guys have, does everyone have to schedule a demo to, I guess, get started, or is there another way around?
So it's a great question, Michael. So for anyone who's interested in the free plan, if you go to our pricing or products page, you can sign up for a free account there. Again, to Charlie's point, that supports companies that have raised less than $1 million. And then if you're looking to take advantage of one of our paid plans, whether that's our base level startup tier or our growth tier that also includes 409A valuations, then they can work with the sales team, schedule on the website, or feel free to reach out to Charlie or myself directly, and we'll get you routed to the right person.
Got it. Okay. Yeah, I do see the launch is the free version, right? So if you guys just go to that site, go to pricing, and then click on the launch, you'll be able to get started for free. Again, if you're a pre-seed company. Otherwise, yeah, I mean, feel free to reach out to Charlie and Bryce. If you guys want to put your guys' contact info also in the chat, we'll follow up with everyone and send an email to everyone after this as well. But yeah, take advantage of it, guys. If you have raised money, if you are planning to raise money, it's a great way to stay organized with everything. And yeah, like we've seen a lot of people get a lot of help from using a tool like this. And I know for sure investors love it, which we'll also get into here in a second too, and chat about how investors are looking at cap tables and how they want founders to be thinking about their investments, as well as board, cap table, all of that stuff as well.
Cool. Thanks, Michael. Don't hesitate to reach out. I just dropped my email into the chat, and I see Charlie's LinkedIn there as well.
Okay, fantastic. Really appreciate it, Bryce. And yeah, if you don't mind just clicking the stop share button, we'll get back into everything, and we'll start up the VC chat here. So I have a few questions prepared. Jerry, are you still with us? Okay, fantastic. So welcome back. I know you gave a quick intro to yourself as well as Oak Seed Ventures. So let's dive into the questions here. I want to value your time as well. I know you've been hanging out with us, and hopefully you've been enjoying this as well as getting some other stuff done. But I have a few questions here prepared. And then for anyone listening, we'll do a couple audience questions as well. So feel free to drop your questions as well around fundraising, anything that you would want to know from a VC. Now is the time to ask that, and we'll get to those here in just a little bit. But I want to start with, I know Chisa kind of mentioned like how he went about reaching out to investors and stuff earlier. But I really want to get your opinion and advice on how you prefer founders reaching out, or what you've seen work really well for founders that have gone on to raise either one or two or multiple rounds of funding.
Mm-hmm. Yeah. Well, fundraising certainly requires a lot of work. But since you folks all took the first step of starting a company, you want to be successful. I wanted to say that to reach to the right investors, a couple of ways, very importantly. First, you want to reach out to the VC that actually actively invest in the space that you focus on. For instance, my company focused on cybersecurity/AI. For a consumer, product company reaching out to me, I'm sorry, I just wish I could help, but I just can't do much about it. So do some reading. This day and age, just it's pretty easy to find out quite a lot about what the VC funds do and what stage they focus on, and try to make sure that you kind of fit into what the VCs are looking for. And another thing to do is a warm call always works better than a cold call. So what you could do is to search through LinkedIn and see what sort of among your network may have a connection with somebody at that particular VC. So that's going to help you, give you an introduction, and it will give you more of a attention, because just imagine how many people would send their deck over to the VCs on a daily basis. So you want to get that attention. You can also work with your existing investor base. Many of you would first actually reach out to angels, raise the angel rounds before you talk to VCs. So among your angel investors, ask them for help. They may have a lot of contacts in the VC world. Again, that comes into the warm call as opposed to a cold call. So I think those things are very important. And obviously, when you write the email to the, with an introduction from somebody you know to the VCs, just hit the important things like why this is an important things that you're doing, what kind of market you're targeting, and give a very, very quick overview that would be attractive to the investors. I think that would be the most important thing to get attention for you.
Got it. Yeah, I mean, that was the biggest thing that I learned early on when I was fundraising for the first time, was making sure I'm reaching out to the right investors, because otherwise it's just a waste of time for both people.
Right.
And it makes no sense, because at the beginning you're just like, okay, I just want to meet investors, but it's like, no, that you want to meet the right investors, not just any investor. And angel investors are a little bit different because most of them are agnostic, but most VCs are specialized for the most part. So that makes a lot of sense, and something that I kind of learned over the course of like a year.
I'm sure you're a fast learner.
Yeah, I mean, it's something that it was a lot of trial and error early on because I was never in tech and stuff. But yeah, I dropped those three things. Those are great. And then after a founder does the outreach and stuff, what are some things that they could maybe prepare for the meeting? When you do a call with a founder, what's something that's going to impress you while you're on that initial call with a founder?
Right. Well, typically in this day and age, an intro call, especially if you do it via Zoom, is about 30 minutes. So think about it, 30 minutes isn't that long. So you need to prepare ahead of time in terms of the key points to hit. So for some of the founders I've seen, I mean, they're brilliant, but at the same time, after 20 minutes, I still don't know the gist of what they're trying to convey. That's kind of sad because you kind of wasted 2/3 of your meeting opportunity with the VCs. So what you would do is that among your team, after you prepare your deck and so forth, think about how you present that. In fact, when you first start meeting with the VCs, you ask them specifically, I know your time's valuable, I know the time is short, tell me what are the key things you want to learn from our meetings. And I will try to tailor my talk based on what you're looking for. Because different VCs have different things, especially for VCs that are specialized in a certain field. Don't spend so much time on the market, like how big this market is, how great this problem is. That might be good to put in your deck, and you might bring that up. But if your VC already knows a lot about the market, I wouldn't waste your time on that. Instead, go into why you can do better than any of your competitors. So I think those are very important. So ask the questions up front with your VC so that you can tailor your talk. And before that, prepare your talk with your co-founders, with your team. Let's say your Q&A, your partner asks you this question, how would you answer? Then you guys kind of, come together and say, okay, does this make sense? Did it really hit the right points? And after you're done with everything, you should also come up with, let's say, 3 takeaways. So here's the reason why you should invest in us, 1, 2, and 3. And that's going to help the investors to think, oh my gosh, they really know what they're talking about. I really need to take, just look at this very carefully and seriously. And this is a great opportunity. And they told me exactly why. So those are the things that I think would be helpful.
I love that. I think all those things are really valuable piece of advice for people, especially if you haven't spoken to investors before. I think, yeah, getting as clear. The biggest thing that I've noticed too is making sure that when you're talking to investors, you want things to be as clear and as simple as possible. And you don't want to keep rambling on about stuff that they don't care about, because like you said, you have a limited time. You only have 30 minutes to impress them. And most of the time it's really only like 20 minutes probably, because the first, several minutes are just like touching base and getting to know you and small talk and things like that. And then they're also introducing themselves. So they're going to usually spend, a few minutes talking about their fund and what they invest in and things like that. So you're really only going to have 20 minutes most of the time. So yeah, being as concise as possible, I think is great. And then, yeah, I think that was a really great way of outlining it for sure. So how, and kind of getting back to the cap table stuff, how should founders be looking to set up their cap table? Like, I'm sure you've seen lots of different cap tables. What are, I guess from an investor side of things, what are things that you want to see on a cap table? Like, what are the do's or don'ts from your side of things that you've noticed with how founders should be setting up their cap table and what they should be thinking about as they're starting that process?
Right, sure. So it depends on what rounds you're in your fundraising. When you're sort of very early, seed round and so on, obviously you're going to see a bunch of angel investors on there. And I think one of the things so obviously there are, 2 classes of equity holders. You have the founders, the management, and so forth. So those are the common equity holders. And whereas the investors are typically, for angel investors, they could be safe holders, they could be preferred equity holders that would convert into the first price round. And I also want to see the proper amount of option pool. I think Bryce mentioned that because a lot of founders, they just kind of, okay, here's the equity holders, here's and so on and so forth. But what about how do you take into consideration all future hires? Because we all know that startups may not be able to offer market price for salary in terms of cash compensation. So a big part of that would come from the option pool. Make sure you set that up right, because if you don't have enough of that, investors are going to get you to redo it. The typical market convention is that the option pool comes out of the founders to common equity pool as opposed to investors pool. That's convention, and that's also reasonable because that's kind of where the management, the employee will come in. So make sure you get that done right. Another thing is that make sure you mark the kind of like the exercise day and all that stuff with the details, not just the percentage, but have detailed notes so that investors know that you are buttoned up, you know what you're doing, and this is a very savvy team to back. I think those are the things that I come to mind. So I think another thing is about crowdsourcing. I know these days for some companies, they try to go for crowdsourcing, crowdfunding. Just kind of, I mean, there's obviously pros and cons depending on what you try to do. Typically, it could make your cap table a little bit more messy. So if you are going to raise a large amount of funding, crowdfunding may not be the best way because there's a limit of how much you can raise, and each dollar, you know, the dollar amount from each individual that you get the crowdfunding from is quite limited, and so think twice about doing that, because that could make your cap table a little bit more messy. So I think those are key things that I can think of right now. Mike, we can't hear you.
Thanks, I forgot to unmute. No, I think that's great advice. We'll get into the questions here in just a second. Again, if you guys do have questions, please drop them in the room chat, and we'll get to those. We have time for probably like one or two more. I just have one more question here about how founders should be giving up equity for investors, board members, things like that. I guess if you have any advice there, or like do's and don'ts, things that people should really avoid. I know I've been very careful about, you know, giving up equity, especially, you know, structuring boards and things like that, because I know of a lot of founders who have gotten literally like kicked out of their own companies because of boards, or given up too much equity to board members or to investors, and then they have too much control. And I think a lot of founders can, you know, get away from that just by they can avoid that by structuring things correctly. But yeah, I'd be curious your thoughts around that and how founders should be approaching giving up equity early on.
Yes, right. It's always a tricky thing to do, because you want to balance the objective of maintaining control, which is absolutely very important, because it's your baby. You want to, you know, see it grow. You want to, you know, put all your ideas to work. On the other hand, investors also want to see enough returns for this to be attractive. So a couple of things to think about. I think if you put your shoes in the investors, so put yourself in the investor's shoes, you just think about, okay, let's say if I were the investor, I invest in the company. If I wanted to get, I don't know, 5 times of the money back in 5 years, realistically speaking, how much would my company be valued at in 5 years' time? And take some kind of haircut for yourself. Just, you know, I know it's good to be optimist, but at the same time to think about, let's say if my company is going to reach, you know, $50 million in 5 years' time, kind of, obviously it's always hard to necessarily to know whether it's going to be 50 million, 100 million, 20 million, but make the most reasonable guess you can and work it backwards. Let's say investor want to get 5 times money back in 5 years' time. That means today I can price at no more than 10 million, deducting whatever option pool and whatnot. That's how you come to your pricing. So another way to think about it, typically people say, you know, you want to not give up for more than 20% of your equity in, let's say, the seed round. But it could be 10%. It depends on where you are, how far you have gone before you do this round of financing. So it's sort of, you know, it's an art, not exactly a science, but you think of how you could attract investors in that way, just to think about, okay, this is why I think my company will be able to reach that, and this is the return that you can get. Another way to think about, another way to prevent or to reduce dilution is that, let's say if you're in some kind of business that you could pre-sell, that gives you the cash flow without giving up equity. So that's another way for you to bootstrap, to get to a stage where you have a lot more leverage. Investors are reasonable people. If they say, oh my gosh, this company has grown, 100% last year, 200% last year, and it's pretty reasonable to see that they can grow at the same pace or even faster, and they would be more willing to negotiate for a lower percentage in equity. So there's so many factors in valuation. So it's just, really, I definitely would recommend, if you could bootstrap to a certain stage, that you would have a lot more leverage. And you can also apply some kind of creativity. I've seen this. There's pros and cons to this approach. People say that if in 2 years' time my revenue would reach this stage, here's the valuation cap. And if I reach a certain, higher or lower revenue and whatnot, or whatever milestone, my valuation cap would be, higher or lower accordingly. So those are another way for you to be aligned with investors' incentive. But of course, that takes a little bit more creativity and thinking through this. It doesn't have to be done every day, but if you run into some kind of gridlock in terms of negotiation with your investors, that may not be a bad place to think of in terms of creating value or come to some kind of agreement there.
Got it. Yeah, I think that's really smart. I think figuring out ways I always tell people, you need capital in one way or another. The best way is from customers instead of investors, but it depends on the kind of business you're doing. But yeah, figuring out ways. For us, it was events to bootstrap. For a lot of other people, they're selling a product. They can do pre-orders, pre-sales, stuff like that. Chisa was talking about doing pilots and things like that. So there's a lot of different ways where you can do that. The other thing that I've seen a lot of people do that's really smart is they get basically like LOIs or like companies under contract for basically just saying that they will pay in the future once the product is done, or like an intent to pay, basically. So those can be really helpful if you can get companies like under contract or just like, basically saying that they will pay. I know a lot of people have raised money from those as well, and that's worked out very well. But I know we're already over time here. So if there's any other final piece of advice that you'd like to share for founders and where people can reach out to you, or what's the best place that people could reach out if they have follow-up questions or want to talk to you about fundraising, or think that their company might be a good fit for you?
The only thing I would say is that, Michael, it's wonderful that you're creating this platform and this opportunity for many of the startups to learn about ways to build their venture and build their companies. It's definitely a great service that you're providing to the community here. And in terms of future opportunities for discussions and so forth, Michael, do you mind, kind of follow through if people have any sort of, additional questions and just forward them to me? Would that work?
Yeah, for sure. The easiest thing, if you want to just drop your email or whatever in the room chat. If you don't want to do that, if you want to reach out to me, I'm happy to like filter that for you. But if you want to drop anything, go for it. If LinkedIn or email or whatever, you can go ahead and do that. But yeah, I'm happy to kind of filter through some startups. Obviously, like you're looking for specific ones in cybersecurity and AI as well. So happy to do that as well.
Great. Well, all I want to say is that, and best of luck to all of you guys. I know that you have a lot of great ideas, and we do want entrepreneurs to do what you do to make a difference to the world.
Well, really appreciate that. I know we had a great time today. Again, the recording will be out later, but really appreciate your time. Thank you, Charlie. Thank you, Bryce, for sharing more about Fidelity. I don't know if there's anything else that you wanted to share, Charlie, before we wrap up here. But yeah, go ahead and check out shoebox.com if you're interested in that. Oakseed Ventures, and then Chisa at Pedal are all three of the companies and people that we had on today. If you guys need anything, feel free to reach out to us. We're always here to help. We'll be doing more stuff with Fidelity. We'll be doing events in New York with Charlie, Austin. We have an event coming up in San Francisco as well. And Miami will be the major cities. But if there's certain cities that you guys want us to host events in, let us know. We're always down to do them in different cities, and also obviously virtual here on Entre as well. But appreciate your time.
Yeah. Mike, I'll say the last thing. If anybody wants more educational content in this world, feel free to share it with us, and we'll be creating a lot more educational content with fundraising. So give us that feedback, and we'll continue to evolve and iterate on what would be helpful for you guys.
Yeah, for sure. I think this is the start of a lot of workshops that we're going to start doing for sure. We have a whole new learning section that we're building out with a ton of workshops and video courses and resources for everyone. We'll also be doing like different sorts of templates and things like that as well to help everyone. And I think we're going to start doing some like more pitch practice kind of events and workshop as well with VCs. But yeah, if there's anything that we can do to help, reach out, let us know. Feel free to DM me here on Entre is the easiest place, or reach out otherwise. But yeah, appreciate your time, Charlie. Thanks for coming on. See you next time, everyone. Check the events feed if you guys want any updates on future events. We post all of them here. I'll just screen share real quick. We post all of them here on Entre. You can go over to the events section. Hopefully this loads quickly. And check out those. There's also a ton of other content being posted here. Event section, job section. We post a ton of stuff here, guys. So any future events will be here. You can search and filter these. If you also want a AI headshot, we just rolled these out recently. We're doing a holiday special right now where you can get 100 headshots for $10. So if you're looking for a new headshot, you can upload your existing photos, and then you'll get 100 different basically variations of headshots just like these that you can go through. There's a ton of different variations of headshots that you can choose from here, guys. And yeah, we're working on updating that and making it better and better, but it's very good if you're interested in that. The code is just holiday. So you can go to joinentre.com/AI headshots and yeah, get your headshots there. But appreciate everyone for tuning in. Like I said, reach out if you guys need anything. Stay tuned for the next one. We'll be doing a lot more virtual events and also in-person events too. See you guys next time. Cheers.